sure this is going to work correctly. Alright, looks like we are live on YouTube right now. There we go. So anyway, we trade basic price action, and man, sometimes you'll get one of us that come on here and make it look real easy. And once you've kind of gotten the feel for how to ride the bike and push the pedals, it really is easy. Just takes a little while to develop all that stuff. Sometimes you need training wheels, sometimes you need a little bit of guidance. Sometimes you need to make a mess out of your chart drawing on it. But all you really got to do is if this then that. This pivot here, 398, been on my chart for months. Breakover right here, bam, how easy would it have been to trade that gap at 4 in the morning. Same with this area here, we get a 50% retracement of it. Right down to the middle of that gap, this whole trend right here. And with a measured move pause in the middle of it. And what it comes down to is the other simple acronym that I've kind of modified a bit, or maybe bastardized, depending on how you look at it. I'm certainly not military, but I understand some things about how things work. And over in sniper school, they have this thing called DOPE. It's D-O-P-E. It's an acronym. And it's data on previous engagements. Well, price action, when you plot out all your trend lines, your pivots, all this stuff, you're just developing data on previous engagements. So I changed the last word to encounters because we're not really engaging this price like we're trying to kill it per se. We're just trying to understand where it's likely to move next. So instead of engagements, we say encounters. And that's just effectively the way it works for me. I can go and draw lines on my chart. I'm essentially plotting trajectory and telemetry. I mean, it's kind of the same. So it's a great way to kind of reference an existing acronym that does just that. It gathers data and it looks forward with it. So when you draw all this stuff on your chart, and it may look pretty damn messy, but you're the only guy reading that rifle stock. This is all yours. And when you recognize what you are seeing and how you should react to it, you have kind of a roadmap for where you're likely to take the trade. Develop a trade plan from that, and eventually you start getting really good at it. You start making it look easy. You may be wondering why this particular liquidity zone is red. And that was based on a go, no-go zone developed by this candle wick back here and carried forward. And at one point, it was critical support, and that was when we had this spike over here. That was just one big FU. If you think of this looking like a fist with the middle finger up. And as soon as it broke the key pivot, went right to critical support and snapped it like a twig. And then came back and visited it again for resistance. Well, get all this show all said and done with, now we're right back under it. So if we breach this zone, we're very likely to continue to this zone. If we reject this zone, we're very likely to come back and revisit this zone, possibly hit the bottom of it, because somewhere in here is a retracement line. There it is. That is about half of that trend from bottom to where we're at now, roughly. Thinking more like at the edge of that liquidity zone is more likely what we'll see. Now that it is the liquidity zone, I don't need it. I can get rid of it. Too many lines on my chart as it is. So if the Fed gets a little bit squirrely today, and we usually expect it to, sometimes we'll have extreme volatility in the moments leading up to the podium time, and then we'll have another completely opposite set of volatility, big ass bars and stuff, immediately after the person starts speaking. It's incredible how much power that has over the market, but man, it makes it move and dance and do all sorts of fun stuff. So what it comes down to is knowing where your defined volatility is, and that's what's great about these diamond patterns. It gives you a great idea of where that range is. So right now we've been in this rising channel, crawling along the bottom edge of it, and we've met our critical resistance. So if this then that would predict run to 403, we could even see it up to 408, at which point I could just stretch this liquidity zone from back here all the way across the chart. That's about where it was. As long as I know where it is, it's still within that channel, we could just ride that whole channel. If there's a nothing burger yet the market continues to melt up, we can probably pretty readily follow this trend line. These green lines are a recent shorter term diamond pattern that showed up on the 1 and 5 minute chart yesterday. And that's where this plays in. So we're kind of in an area where we're in the lurch. Now we're up against critical resistance. Short-term price action can stab us right down here to 392 pretty readily. Just using one volatility pattern to define the possible range of the next volatility, which is today. We're expecting the pivot on the Fed. Well, we can go either way. Sometimes good news is bad. Doesn't matter. We're just trading the price action. Back to my 1 minute chart. So it's looking like we're about to open right up under the edge of this critical zone. Let's see here. It may walk back down to 398.80 briefly. And if you just look at this as a trend, you can certainly stick a 50% line somewhere in there. Yeah, 398.75, sure, why not? Sounds like a good number. Just a quick little retracement of this guy here. As you can see, it's done kind of this sort of thing before. So we have this gap here, 50% lines right about here. You can see price has reacted to it twice. Came into liquidity, got a measured move, leg down, finished the move, target met. Now we've bounced back up. Well, that 50% line kind of lines up with this garbage back here too, which is the top of that gap, roughly. We can move it up a little bit if you want, but I'm going to keep it there. Morning. Kind of struggling along. I'm trying to mute my microphone between hacking up a lung. So, a little sore. I'll make it. It only hurts when I sneeze. Yeah. Or reach over my head. That's okay. Live and learn. I was welding something up, had some cables laying around, and took a quick dive from my workbench. It was it was quite funny. I was laughing more than I was crying. It was quite funny. Oh boy. Right. Oh jeez. Ow. At least the blade side didn't open up your skull. Yeah. It's a quick laceration. Nice. Yeah. Yeah, it's kind of incredible how some skin in certain areas will heal without scarring. I've got many. So I'm kind of keeping an eye on this GameStop situation, and we're just under that pivot there. That flag might run it up to like 31. It's got to get through. I mean, it's there, but you know, did I say AMC? I meant GME. Sorry, GameStop. But same these days. You know, I guess they posted a surprise profit last quarter or whatever. Yeah, yes. That's a long road from being a net profitable company and just having a good quarter against several really bad quarters. The offsetting loss is how much revenue is going back in to pay debt based on losses from the previous quarters. Yeah, that's true. I mean, given the proper management, I mean they can be a profitable company, but it's one thing to pay attention to, by the way. That is a big old measured move right there on the daily chart. That makes our key pivot here. And I think that's the one we're playing with right now. So if it can breach this, cool, I'll believe it. I'll run with the bulls. But if it gets rejected here, I might just short it. I mean, that's 50% target met right there. So I mean, it's got potential to run up to that 31 or a little higher maybe for now, but this is a whole bunch of FOMO diving into it, chasing it. So I don't know. We'll see. Yeah, it's FOMO fueled desperation because when you're short a stock, man, I mean it's not recommended for people with heart conditions for a reason. It's quite exhausting. So like you are constantly worried about two things. One, how much does it cost you in interest to borrow those shares from your broker? And two, how fast can this thing rip your face off with your inevitable infinite loss potential? Like if this thing went to $3,000 a share in 5 minutes, you're you're doomed. I mean, unless you can close that position or have it auto liquidate, you are doomed. So, that's a huge thing to put on a trade. I like options because the risk is always defined. You can't lose more than you risk on an option. You can sell naked options and get yourself into a situation where your infinite loss is there, but don't sell naked. It's that simple. So it's just kind of always amazes me that people would even short something like that. And then usually when you're short, you're like kind of comparing the difference between a spirited driver and a passive driver. So like the spirited driver may drive too fast and may always be weaving in and out of traffic, but they're usually paying the most attention. So compared to the passive driver who might glance and look at a text message every now and then or something, believe it or not, the somewhat spirited driver tends to be a little bit safer for drivers. Even statistically, it's proven. So they're paying attention. So when you think about a short squeeze adding up to a whole bunch of people still being short, well, they're probably out of the way real quick. The majority of them. Right. So, I mean, the people who were FOMO'd into a short position thinking, no way, this thing's junk, whatever. Yeah, if they're still sitting there, they panicked at that big old green bar. And then they had to eat a loss on this stuff and a little at a time. Where did they get short? Yeah. But I mean, look at how far back you'd have to go. February 6th. How many days of interest did that accrue while you were waiting for this to hit the bottom? I mean, that's the way I see it. That was a short opportunity there. Each of these was very short-term short opportunities. And you could have shorted it on this revisit of the 50%, this little trend here. There's your 50% retracement, break over. Yeah, short that. But I mean, the people who shorted way back here, they're probably not caught in this mess, the majority of them, but I'm sure there's a few. I don't even know. I mean, you'll see the red, but that doesn't necessarily mean shorts. It means, typically just selling volume. All right, we went right to that 50%. Let's see what happens here. Woo-wee. That's a quick bar. See if I can scalp my spread real quick. FRC just bounced really hard. Morning. Let me get GME back on a 1 minute here. Oh, sure enough, rejected the key pivot, 50% retracement. Keep an eye on that one. Intel Corp here is playing with that breakout line. And we'll see if we run it. Big old tweezer bar on SPY right back to the 50% line. Give this a couple more 1 minute bars and we'll see if we get a quick trend out of it. Supports down here. 398. Bam, there's 1 bar breach. I had the last 2 hours of yesterday, I was able to make a nice scalp on some 0 days. I went and bought a bunch of $3.99 calls at 5 cents a piece, and then sold them at 15 cents a piece. That's pretty awesome. I was trying to sell 0-day credit spreads for the longest time, and every time, like, because I do it in my Robinhood account, they try to auto liquidate it, and it just drives me nuts. I mean, it's just kind of weird how they operate. I wish they would give me another level of options trading where they leave me alone and let me handle my own trades, but they won't. It's against their policy somehow, so I'll just have to keep proving to them what I can do with that stuff, and then maybe one day they'll listen. Technically, you could do it with a Webull account, but they're kind of weird too, because they won't let you run certain spreads at certain times as well. Not saying they would liquidate it; they just won't let you open it. So it's kind of a catch-22 of, we're not going to let you take that much advantage of this zero commission. Good morning. So it's like, right. Especially, like, you know, if you're trying to sell a 0-day credit spread on SPY, sometimes they won't let you open it. If there's like an assignment risk, it's one thing, but when there's an assignment risk plus a dividend X day, then they absolutely, neither broker will let you open it. So that's why I'm also putting into TOS, because I want to do 0 days on SPY options as well as 0 days on SPX. That I'll do, because there is a setting in there you can tell them, hey, I'm in control of this, leave me alone, and they'll leave you alone. They won't auto liquidate anything as long as you ask them. It is. The commissions are pretty high, but when you stand a chance of making really good profit on a 0-day credit spread, you know, even if you just barely get out of it for a small loss, those commissions aren't going to really matter much. But the one that you kill it with will eat any of your small losses, as well as just make those commissions insignificant. So that's what I'm looking to do. All in time. Right. It's that implied volatility fade. That thing is vicious on Tesla. All right, there's G. Yeah. Those are tradable. You can day trade the crap out of that. You know? Nice. Yeah, it would have smacked you. I'm looking at opening up a YOLO, because I know the first week of April they're going to announce some of the production numbers, allegedly. So I'm looking for debit spreads, April 21st expiration, like a couple YOLOs to put together. Yeah, I'm gonna go like way the hell out there and go with like 285.90 or something like that. Currently 8 cents. Yeah, you go even crazier. You could go like 290, 295 for. You could probably pull that off for 7 cents. That's a penny difference. So like I'll just go closer. Right back to that regression line, man. Bam. Or 50% line. I love SPY. It's so easy to predict. There's GME fading that line. Where next? Well, we can look even closer. Globex low for that right here. 2382. That's easy to spot. Nice. I've got the account set up. I just haven't funded it yet. I'll get there. Here we go. Wow. Anomaly. Yeah, that's define anomaly. Please. That's nuts. Oh no. Failed. So we got. Oh, it's okay. I was just going to map out some price action. We got a quick little measured move to the bull side, hit the pivot, 50% retracement, rejected back down. Now we're pulling back down to support. I don't think we're quite going to get to this line. I think we're going to find support right around here. Let me redraw this. Yeah, this will be. If it can't breach this, it'll. Yeah. Well, this is great for future scalping. Like here, we could get a quick little three-pointer right down to that support line if this is rejected like it just was. Give that a few bars to make sure it confirms, but you can get little short trades out of this, like very short duration, like 30 seconds in some cases. Damn. That's some big move. Alright, I've got a... Wow. That's nuts. Oh, GME's fading. Almost predictable. Let me look left a little bit and see if we can plot a couple areas of support. There's one right there. Right top of that bar, 23.12. I'll just slap a pivot on it. It can bounce here. This is like the last resort. If it doesn't hold this, it'll fade right down to about half of that, $20.45 or so. I'll stick another line on there. Oh, come on, draw. Why won't it let me draw? What the heck? There we go. And there is a 5-minute 200 here, which will be significant. That is 22.30 currently, 22.35. Just keep an eye on those numbers. We'll watch it for a few more minutes, and if it doesn't do anything fun, we'll put something else on the grid. Intel is just kind of eking out above this critical support line, or this critical pivot. And it's right outside that descending channel, so pretty much anything happens here. This is our third impulse on the angular resistance of that channel. So if it's going to get swifty and be bullish, we know our targets. So definitely keep an eye on Intel for a quick swing trade, or possibly running some debit spreads, or whatever you got to do with it. It's your trade plan. You got to follow your own instincts on that. We've got a 1-minute double bottom kind of happening on SPY here. So this is our short-term liquidity. We came and finished that move down to this, as I call it, the angular fan line here. Bam, target met. Now we're likely to come back and bounce up to this one if this double bottom holds true. The R1 breach is right here. Came back, tested for support, crawled on out. We've hit target 1, target 2. The extension's up here across these two bars here. And that was just about met with this wick right here. If it rejects here and continues to plunge the 20 period, we could revisit the support zone one more time, but I think it'll hold here. Let's see. Yeah, it's got the H, or the double bottom. We're back to the mean on the L1 and L2 of the 5-second chart here. And we just breached 20, so yeah, we'll finish that move. All right, I threw together a YOLO on Tesla anyway. I ran the 290, 295 calls. April 21st expiration. Got them for 6 cents. And that's kind of a YOLO. That's not like a call out or anything like that. That's if Tesla's going to hit 300, that thing will pay very well. If it doesn't, I'll try to break even on it, or if I got to eat the loss, I'll eat the loss. I don't care. It's such a small risk. That's a $5 wide spread for freaking pennies. I've had much success trading those on Tesla, as you might recently recall. And like that's the thing about these debit spreads. Like if you find the right niche with them and you get in like very low risk with potentially high rewards on them, you could take losses time and time again. But when you get the big one where it really pays off, it erases all your loss and puts you in the green. So it's like a matter of practice, and when you start getting it right more consistently, it can become an income strategy that works very well. So I try to cut them at 20% loss. So like if I see it's going to just rip down or rip away from me, I'll try to cut them at 20%. But I mean that's minimal. That's like losing $1 out of $5 risk. So it's like if I spent 5 cents on a spread and it goes down to 4 cents, if it's going to be just against price action, I'll cut it there. The thing is, like, when you're at that low of a risk, if you compare it to the delta numbers on those options, the mean delta in that position is going to be very low. And I learned this when I was day trading SPY options and QQQ options. Finding the sweet spot for risk to reward was as simple as looking at the delta. And the reason is, like, when you've got like a delta, whether it's in a spread or a straight contract of around like 0.06 or less, that's very low delta. It takes a while for that to start making money, but it takes quite a bit of movement for that to start making money because delta changes exponentially up. But when it's already that low, it does not change exponentially down. So if the price moves against you, you've got lots of time before it really starts to eat anything. That's 0.06 delta. It's very low. So the idea is that it will take a lot longer to move against you than it does to move with you, because when delta goes up, it's exponential. It will take quite a bit of volatility to make it really start to pay, but in the meantime, if you've taken a risk that's low enough, your percentage returns are going to be crazy. So like a shift of 0.02 delta, so if it went from 0.06 to 0.08 on a spread, and you risked 5 cents on that, that thing could be worth probably 8 to 10 cents, and you've made a 70 to 100% return on it. That's significant. You do that enough times, it makes making a living easy. So it's just playing the statistics on price action. Like, you could go and day trade some out of the money SPY options, and you could still do it. There is still a sweet spot. It's not as great because it's saturated now to 5-day expirations instead of 3, or 5 weekly expirations instead of 3, and it does kind of soak up a lot of that volatility, but it still exists. You can still go and look for those low delta swings, as long as it's like typically between 2 and 5 days to expiration. You can find the right delta if you're patient, and you can scalp these little moves on SPY just like you would with futures. And I did just that yesterday and did very well. Just that the multiplier changes with options, whereas with futures it's fixed. So that's the only real difference. And then there's time decay and all that stuff too, but if you're just scalping them, you don't have to worry so much about time decay. When you're in and out of them in a few minutes, then it just isn't going to matter. And then there's the other thing, like if you're doing this in a cash account, it's fairly simple because your settlement is overnight on options. Also, there's no PDT rules on a cash account, so you can trade single options contracts all you want, and as long as you have settled funds to trade them with, you're good. Nice push right to that angular, damn near. So you get in on that stuff, and a cash account is king. But let's say you want to start getting into debit spreads, you want to start swing trading, you want to start selling options. Well, you're going to need a margin account for that. The caveat is your day trading goes out the window, because if you're under PDT, it goes out the window. So you're kind of in the lurch about what to do. Well, there is a strategy that you can develop for yourself that makes this easy. By, instead of closing positions, you can convert them. It takes a little more work. It's a lot more difficult to do, but when you do, you avoid making a day trade. So what you can do is you can go and day trade one of these SPY options to scalp is your intention. But if you do not want to commit a day trade and have to wait 5 days for that day trade to roll off, instead of closing that position, you can convert that position. So like, let's say you bought a call, it ran, you got 300% profit. you could go and sell the next strike up against it and probably net about 120 to 150% profit on that and lock it in. It can't lose. And as long as it all expires either worthless or close to the money, you can get to keep a little bit more. But if it ends up in the money, you got the chance of collecting the entire width of the spread. So like, let's say you risked, $5 on a contract, you sold the next strike for $10, you've locked in 100%, and you have a net profit of $5 on that contract. And your risk is negative 5 cents or $5 on that spread. Now, if it ends up being in the money, or if your long leg ends up being in the money, you get the distance between one strike and the other for the difference. So let's say you've got a dollar wide spread and price is settling about halfway between the two legs. Well, then you've turned that negative $5 risk into $50 profit on top of that you've already locked in, because that intrinsically will be about $50 value. If it ends up all the way in the money, you get damn close to max profit, then you've got like somewhere around $90 to $95 profit on that. So you can kind of have a shot at making a whole lot more on returns while not committing a day trade, and you've already locked in profit, so you can't lose. You theoretically can't lose on that option. There are some caveats to that. Occasionally, you'll get early assignment on something. You just have to pay attention to that. If you do get early assignment, you have to go and exercise the long position to offset the short position. And sometimes, if that is during the live market day, you'll get a little slippage in there, but you're still more or less going to get a profit from it as long as you're active on it. On the other side of that, if you have one when it gets assigned overnight, well, you have till midnight to exercise the long position. Otherwise, you're going to wait till the market opens the next day to liquidate it. So there are some risks in there, but as long as you're managing that trade, you'll be okay. Just that there's just many ways to overcome all the little rules and stipulations in the market out there. It's not just the PDT situation. It's much more than that. That's it. A million ways to skin a cat. Whatever works for you is the most important one. All right, Intel breaking that breach line. We're off. Let's see if we can break 28.65, which we're just a penny over. And 28.74 is the Globex high on this wick right here. So that'll be our line in the sand whether we start to approach this pivot up here at 29.10 or not. I've been running April 21st expiration contracts on Intel. I've been walking in and out of the short legs. I went ahead and left the long legs open through yesterday. I didn't convert them back. So as soon as this hits a resistance point, I'll go ahead and sell the short legs again and lock in some more profit and still have a position, still have a dog in the fight, so to speak. All right, we've got a new fan line appearing here. There's one right there. It's a little rough because there's a diamond here. And we'll throw this at it too. We'll see which way this breaks. There's your old support line here. This is going to be volatile and difficult to trade. We had our double bottom fail. It rejected 50% retracement. Now we're just kind of hanging out and waiting to see what side this is going to go on. We can get a triple bottom out of this, sure. If this, then that. We just sit and wait. Meanwhile, GameStop is hitting that key area. We'll see if it holds support here and bounces, but not looking so good. Yeah, it's likely to be an all-day fader until someone pops some sort of news, or you get a whole bunch of people copycat trading or whatever. Some pumper comes in and says something about it. Who knows? A million things happen. Boom, breached our resistance line. Now we're up to the pivot. That's that 50% retracement line. No, it's not. That's an old pivot. Sorry. That's the 398 pivot. Nice. The spreads I bought are pushing 7 cents now. Woohoo! No, I paid 6 cents for those, so it's, yeah, that's minimal. Minimal. Like I said, though, even if it goes sideways for a little while, it'll work against me much slower than it works with me. Kind of waiting to see what happens with this regional bank over here, FRC. That's going to be interesting. I'll get that on the chart in a second here. Right back. Wife's heading off to the gym. I had to wish her well. Okay. Oh, I got a question on YouTube here. Hi, I have a Tesla covered call with expiration April 21st and strike is 185. How should I handle that? That is entirely up to you. Nice work, though. That is going to be some serious income on time decay between now and then. So if it were mine and it was a covered call, that's hard to say. I would, I'd probably swing it a few times, but that's just my style. Got a pennant here, high and tight. We broke the line. We're up against the 1 minute 200 though, so we got to confirm that's going to be a breakout before we go long on this. Oh, that's starting to look like a bat. There's your first high, second high. Oftentimes these will break bearish and then they'll bounce off of a key support area, so we might see this break over and reach down to 398, probably 398.25, 398.30, somewhere in that neighborhood. If it fails to break over here, we just set up a bull target and we'll pull one of these off. How about that one? Oops. Not entirely, but I know what the range is likely to be. So, just a diamond pattern. So we have that one that formed yesterday. That gives us these two lines here. We got, there's your downside, there's your upside. That's typical range definition. We've got this old critical liquidity zone from way back. I think that goes back to like February 7th or something like that. And then we've got this zone here to crush. The only other thing that I can see that's even relevant is that the bigger diamond pattern plays into this much more efficiently. This is our big ass diamond pattern here. There's your regression line for the upward channel. We've been crawling along this trend line and we're still hanging there. So if we breach this liquidity zone, we can very easily hit that regression line up here at like 408. So that's a possibility too. This guy from yesterday's diamond kind of lines up somewhere around 405, 406, so it's close. We'll have to see what happens on the break. That's the bull argument. The bear argument is if it breaches this support line, we've got quite a bit of dropping we can do. We can even visit the 388 again by the end of the day. And that's just defined by yesterday's diamond. There's a pivot there at 392 as well, so The other thing is when these diamonds occur, you get the divergence of the two lines. So you got angular support on the compression side and angular resistance on the compression side. Once price gets in that area, it doesn't like to stay there long, and we can see that evidenced here. We came down through it, and it didn't quite reach the other end of it, bounced off the liquidity zone that it generated, but it was also off of angular support. And that did not take long at all. So looking at, here's your divergence point. Price was here, breached, went right down to the bottom of it, and bounced right back up. So, and it did it twice. I mean, it wicked it here. So usually when it gets in between these two zones on divergence, it doesn't want to hang there long. Well, yesterday's diamond, now mind you, this is a 1 and 5 minute diamond, so they're a little less powerful when it comes to this stuff. The big diamonds are the ones that usually define the proper range. But this one gives us what to expect for short-term volatility range. And right now, we're in a divergence area. So if we break this line, we'll get a very quick move likely down to here. But if we don't break this line, we're likely to come and hit up here. So the volatility is coming. We know that the FOMC meeting will bring volatility, and we have a pretty good idea of where the range is going to be. So far, like every time we've had seen a diamond pattern last year, they nailed exactly the range. I think we had one that was relevant, but it missed the range by like all of 50 cents. But damn, that was close enough for day trading. Other than that, all of them nailed exactly the range. I mean, it was just incredible how accurate that pattern was. And here we have two of them. So we have yesterday's short-term diamond and we have the long-term diamond all on the chart. That's why it's just messy as hell. But that mess, like I was saying, when you're drawing your own dope on your rifle stock there to figure out what your telemetry and trajectory is going to be for that bullet when you go to shoot targets at long range. This is your dope. If your chart looks like this, you got plenty of dope. It's nasty. But all that information is pertinent. And when this is over, I'll probably delete all of this and start over, because there's a lot of wasted lines on this chart. It's making my brokerage app lag a little bit because there's so many lines on this thing. Right. And when that's over and all that price action's been met, whether it's been proven or not, I will delete it at the end of the day. All right, triple bottom working. We're up against resistance again. We're about to hit this fan line up here. Maybe. Meanwhile, Intel is crawling up. Got a high and tight flag here. We'll see if we get continuation or not. GameStop, we got a potential double bottom here. So let's get that sucker in focus here. We pulled back, tested the mean. We might have a shot at hitting $24.90, $25 here. That's possibly a decent swing trade for somebody. I'm going to mark out the R1 there. This is the if this then that line. So if this double bottom confirms, that's where it's got to break. This is the trend you'll trade. And then also pay attention to one thing. There's a short stop right here. That is your target one on a double bottom break. It always tends to follow the previous control bar. That's your control bar. And look, that range, base of that bar line's right up with R1. So if this is going to be a double bottom that actually breaks, there's your bull trade. Where's your bear trade? So that's the other thing we can figure out. Whenever you have a double bottom, it has the potential to become a bear flag, especially after a steep trend like this. It can be the bear flag that sets up the measured move, the bearish measured move. Let's look left. Well, we're at the top of this gap. a measured move would put us right on about that 50% line right here. So if it breaks this support zone, it'll likely hit that line, but always mark out about halfway between that. So, you know, you got about 2180, somewhere in that neighborhood for a potential area of interest. We'll mark it right here. Just kind of gives you, you know, a space between the spaces. Make that some funky color so it stands out. Then go back to our 5-minute chart. That's your short-term half leg measured move. And look, these bars on the 5-minute gives you about the same height on the break. That simple. So if this is a bear flag, if it rejects clean here, this is your key support area, this pivot here, and this is your target for bears. That's target 1, target 2 is down here. As Intel is breaking out, watch for resistance right here, about 2875 or 2874 as the Globex pin bar would have it. So haven't quite met our extension on the fan line here, but we've got about halfway. Let's see, divergence. Oh, is it coming out of a halt? Oh, sweet. Nice. Oh wow, 1630. Cool. Go baby, go. I got some YOLO spreads on that too. I do. Oh, they're way out. I spent 2 pennies on them. It's $5 wide, 115, 120, April 21st expiration. YOLOs. If it returns to $100, those things will be golden. If it doesn't, oh well. I'll, you know, lose $20. I just have 10 of them on. I'm not doing 100 on those. All right. Here's our wedge. We've rejected that pivot one more time. Break over. And there's another fan line we can watch right there. And also, whenever you have any angulars that are divergent or, you know, diverging, kind of use your eyeball and figure out where a regression line would be. And this one's a little weird. It doesn't follow your traditional, you know, middle of the channel type of line. This is kind of the upper range of it. But you can see price has respected it a couple, 3 times here. This can be the regression line between here and here. So if this rejects, we can follow through, take a bear trade. If this gets broken, we can follow through with a bull trade. Let's see what it gives us. It's looking like we're going to make that breach. And let's see, where does it take us? About 399. Last chance right here. Can't put a bar back through the 20 period. It'll roll down right to pivot and possibly extend down to here. So the bulls would have targeted 399. They failed here miserably. Down she goes, right to the pivot. And 1 minute chart says likely to follow through a little lower. In fact, I could just grab this line and adjust it. Take it right to here for short term. And that puts us on target for about 398.30. Or this fan line right here gets you there too. Basically the same line. See, it's just this point and this point for the 1 minute, this point and this point for the 5 second. Oh, look at GME. I'll be damned. R1 breach. We're going for target. Just as I looked away. Nice. Yeah, it'll probably reach right back down. I might even breach $15 for a moment there. I'll get that on the grid when I get tired of something. I guess I could throw it in place of Intel Corp. This is more of a swing trade. Let's look at FRC. I like volatility. It's a clean tweezer. That's about that 50% retracement of that little trend here too. That's your measured move. Accumulation, bull measured move met. 50% retracement takes us to about 1535-ish. If it's gonna bounce, it'll do it off the 20 or off of that line. Damn, dude. 398.31. What did I say about 398.30? Look at that, dude. So like you could literally, whether you're trading SPY options or the futures, you could literally make a living off this chop, dude. Just little 3-point scalps here and there on the ES, MES, or with SPY you could do it with repeat 20 to 50% returns on day trading options, give or take. And if you get a full, couple dollar move, if you find the right sweet spot for risk to reward on those options chains, dude, that's where those 100%ers just rinse and repeat over and over and over again. Way back in the, it's rough, but if you have, if you have that quickness and propensity to be able to print accurate fan lines on a 5-second chart, it makes it easy, even in this garbage. It's like you can just sit there and just rip these things around over and over and over again. And when you get the right one at the right time and you make a full, $1 or $2 move, that's where those 100%ers just print over and over again. And gosh, back in the day, it's like everybody was in the large cap room, and at the time I just started streaming in the penny stock room. I'd always have SPY in the corner, because I'd be trading SPY while I was also scalping pennies at the same time. So I would be trading options on SPY, and I'd be watching the price action to kind of get a general idea of what the market's going to do, so I could kind of judge where my penny stocks were starting to get weight. And scalp, 10, 20, 40, 100 shares of whatever penny stock at a time. Some of them might be into 1,000 shares or whatever. Meantime, I'd be over, trading options on SPY 10 or 20 at a time. And I would just be, every day I would throw it up, probably 2 or 3 times a day. I'd have a 100% return on a scalp on SPY. And it was just kind of watching that price action on the short-term charts. And yep. Oh yeah, that's when I was doing the futures on it too. But I would be doing the options on it before that, and that's when I would just be nailing those returns all the time. And I'd throw them in a large cap room, and they're like, "What are you doing, messing with that strike?" It'd be like, sometimes it'd be $20 out of the money. Like, what are you even doing looking at that? I'm like, I don't give a damn about what it's worth in the end. I don't want to hold it to expiration. I'm holding it for minutes. I want the percentage swing. I want the best risk to reward ratio I can possibly nail in that, and I'm just scalping the price action. So I'd be going and printing those 100% returns all the time, and occasionally I'd have a big one. I'd go and do something similar with like Disney or something on a news swing. And I think the biggest one I posted on a single contract position it was on Disney. It was like 417% in like 10 minutes. It was insane. And I would go and just be doing these 1 and 200% returns on SPY all damn day long, it would seem. And I was just, making my day done with what I could as far as the best efficiency possible, because I had a day job I had to go to and be there, around noon or 1 o'clock. So it was just using the most efficient application of my time versus the best short-term risk to reward ratio. And I just, fell into the niche. It's just scalping price action just like I do today. Finally. I had found a sweet spot, and this is back when it was three weeklies expiration. So it was like Monday, Wednesday, and Friday expirations. I would look for expirations that had time on them from anywhere from like 3 to 5 days to expiration. And after a while, I wouldn't even look at the delta. I would just, I'd go and look for the premium price. And I would go anywhere from 38 to 42 cents for the contract. I would be able to get it that fast because I was trading price action on a 1-minute chart. And at the time, I was just starting to mess with a 10-second chart. And I didn't really have time to sit there and start cruising through all the Greeks on those options. I needed it now. So I would just flip open the options chain and be like, okay, well, that one's trading at 40 cents. I know it's about to bounce here. Bam, grab it. And within minutes, I would just close the damn thing. Sometimes I would have time to take a screenshot of what I made with it. Sometimes I wouldn't. And I would just nail those trades over and over and over again. Just, a move from here to here at that sweet spot would be anywhere from like 60 to 100% return, just like that. And just minimal. So like if this were to break over and run against me, it could move a whole dollar before I even saw any loss on that, really. It would go down to like, say I got in at 40 cents and then I cut the loss at like 35 cents. Whoop-de-doo. Didn't lose much. Now it's like I can do the same thing using spreads because I can go and risk in a $1 to $2 wide. I can risk anywhere from like 4 to 8 cents and do the same thing. It's just very low delta, so there's very low intrinsic or extrinsic delta working against me. Same thing, only it's a much smaller move. It's like if I'm risking 4 to 8 cents and it drops by like a whole penny, I've lost very little. Bam, there's your target met, $399.25. Look how fast that sucker ripped down off of that. Faster, almost as fast as I could draw the extension on that line. And that comes from back here. And there was your regression break right there. And liquidity zone. Oh, look at that. Big wick. I mean, you get to scalp this really, really quick, choppy, just nasty, disgusting price action that would just piss everybody else off. And you can sit here and laugh about it. I mean, it's that good. It's that quick and easy. I really enjoy trading and like, one man's junk is another man's treasure, I guess, because I really I come alive in chop, whereas like if it's just kind of flat and slow and grindy, I'm just I'm just not as well animated. I get kind of bored. I could still sit there and make some trades and be profitable, but it's just like this little chop dude. Not a lot of people I know would trade this crap, but I love it. It's my bread and butter. Right. You'll have your your kind of ruts you'll find once in a while. And when I found myself getting to that kind of time, that's happened to me before. When I find myself kind of being bummed, like I'm just not able to do anything right, and it just seems like everything's kind of working against me, I'll go scalp a penny stock because penny stocks are easy. Like this GameStop. Look at this. Boom. Target met. Done. Exit. Watch everybody take profit right here. If it breaks that line, we know where it goes next. If it doesn't, I'm out. I can scale out even. I can take out, if I made a really nice return from here to here, I can scale it out to where I have zero risk left in it. So like if I had, 100 shares and I go sell 85 of them and lock in the profit on the remaining, 15 shares or whatever, I'm done deal. I can just sit there and if it breaks this line, I can take the rest of it off. Or if it continues on, I've got a dog in the fight, But that target was instant. And look how fast people took profit on that. They're thinking the same thing. And when you think about price action in general, whenever you see it and you start to realize what you're looking at, you begin to see what everybody else is thinking. That all that price action represents human emotion. You get to see what people are thinking right on a chart. Right. So it's not about trying to find the absolute winner. It's about finding what is everybody else thinking will be the absolute winner. What are they looking at? Why are they looking at it? What are they looking for? And what are they going to do when they find it? Right, right. That's where that law of probability kind of comes into play. So like you kind of realize like what's the higher probability? Is this double bottom going to follow through, or is it highly more probable that it's going to fail and become a bear flag? So you start weighing probabilities against probabilities, and what do you find? The mean. You find the answer. It's always the mean. So it's like you get the difference between the two, and oftentimes it'll grind out of there and just it'll move to the expected target. It's just going to be a lot slower than everybody else thought. Like here was a beautiful measured move on the 1 minute chart. Look at that angular pop, bam, accumulate right through the 200, right through our pivot, finish the move. Now we're in a liquidity zone, printing up a bunch of wicks. Likely to reverse here? Yes. Can it get through that? Absolutely. And all we got to do is find two zones in this liquidity zone. One is going to be about the middle, which will be just a pivot right here in the middle, and two, the rest of it. So here we are breaking out. We got a big bar. This is the resistance point, 399.40, and you can start printing this into quarters. Like you can put a division line here, 399.25, 399.60, 58, whatever. You can put those in there if you want. I just go with the middle one because I know about half of that is typically where everybody else is going to be looking. If they even realize there's a liquidity zone here, or a so-called supply zone. And then I can revert back to my 5-second fan lines. So I have a divergence here. I also have, whenever there's a divergence or a channel, there's always a regression line. Always, always. Sure. You get two angulars that come together at an intersection where they were there's a focal point here. Then you get the divergence of they're moving away from each other. They're diverging. So then anytime you have a channel or a megaphone or any sort of divergence, you always draw from that point a regression line down the middle. And that'll be your inflection point. So price couldn't break this. When it did, boom, it went with force. Now we're skyrocketing to the top of that liquidity zone. So I mean, it really breaks down the simplicity of price action once you start to recognize this stuff. And before long, you know, if you practice drawing these, especially if you practice drawing these on a 5-second chart, you start identifying these trends, micro trends, pieces within the pieces, or structure within a structure, as I call it. You start to realize that after a while, you no longer need to draw these. You can just sort of glance at that chart and know about what it's going to do. So like you could go, okay, well this trend here kind of crawled up to a point and then accumulated for a while. So if this is going to continue, there's your critical support zone about the bottom of this bar. If this is going to continue, it needs to break above the mean, or above the high mean of this accumulation. And if it does, it's going to probably travel about the same distance it was from here to here. So you can kind of use your eyeball and go, okay, well, that's right about here. We're there. Done deal. That's a measured move. You could do that with just simple boxes. You can go, you know, kind of take a page out of Stone's book and just draw a box. And then copy that box and stack it on top of itself. So it's like you can see exactly where that price target is in a measured move. All you have to do then is spot those measured moves, and you've got trades. You've got trade plans and ideas all in one glance. Right. FRC cracking above that $16.35 mark will signal a measured move as well. 16.65 is not huge, but you know, 30 cents is 30 cents. Yeah. Full bar. And it wicked out of it, but where's the body of the bar? Right at that resistance point, dude. Methodically. Yeah, there's a wick. I think it was the top of this wick right here on the daily chart. I may have even built that on a 2-hour chart. I could go and take a look back. That could have been the top of this wick here, but at some point there was a bunch of limit orders in there. And sometimes when I drag them along, I'll accidentally change the height of them or something. They don't need to be exact. They just need to tell me where I'm expecting a change or where I'm expecting something to happen. And if I adjusted that bar to that whole wick, it would actually stretch down here to the top of this bar here, about 399. It's the old horseshoes and hand grenades adage. It's close enough. You'll see exactly where it is if you want, but realistically, if you just throw it on there and know that there's a lot of limit orders in there, that can be the difference between a profitable trader and a really profitable trader. Here we are coming back into it. Fan line A, fan line B. I heard something go clunk like you dropped it, and now your voice is really low. Knocked over the microphone. Gotcha now. Right. Yeah. And it's like I said, though, this is, when you look at this 1 minute chart, this is junk. Who the hell would trade that? I would. But like if you were trying to make money on this and you were becoming disheartened because you were getting just destroyed in the chop, stop. Go look at something else. Go find a penny stock to scalp. They're easy. That'll give you your confidence back. And then you come back and look at this and be like, oh, it was chop, but you know what? It has a rhythm. It has a pulse. It has price targets. It has fan lines. It has every indication of a trade idea over and over again. And if you find them, and then you suddenly realize that you've got your confidence from scalping a penny stock, you can go back to this and be like, I know what it did. Cool. Now the next time it sets up like that, you'll know I can trade this or I could trade this. So it's like I can scalp all this garbage. This would have been a swing trade on the ES right here. That would have been killer. Or you can take this 5-second chart and correlate it to how many 3-pointers can I bag in this mess. And typically, by this time of day, I can have upwards of 200 trades done already since about 8:30, and bagged that many 3-pointers. And statistically, it sucks because you're going to eat a crapload of commissions in those trades. But when you look at the percentage of return you've got per risk, it's a no-brainer. If you see the setups and you see the opportunities, take them. They add up. All those little base hits, man, they add up to a great day. Yeah. You could be wiped because it can be stressful too, and that stress, man, that stress adds up too. It builds up in your body, and at some point you gotta let it go. And by the end of the day, you can feel exhausted from it because you've been pent up all day trying to keep your heart from exploding while you're trading this explosive price action, and there's a lot of money involved. It can certainly wear you out. It's exhausting. But if you just calmly, collectively plot these lines and trade them all day, it's almost relaxing to me. It's yes. Mm-hmm. Right. At the very least, play with this 5-second chart and finding all these little short-term 3-point moves, and scalp it on paper. Because a lot of people rag on paper trading, and yeah, you wouldn't do some of that trading with a real account for sure. But that's not the point. The point is developing the process. So you get that repetition, you get that muscle memory built up to where you can reactively take action on every opportunity without even thinking. It just you just know what to do. It's muscle memory. And you start getting into drawing these little fan lines and knowing where all these inflection points are expected to be. Dude, you can rip this up on a paper account like no other. And if you want to go mess around and make yourself a paper billionaire in a month, you can. You can scale those positions. But yeah, I mean, while you're waiting for your big swing trades or your trades that take place, on specific setups, specific breakouts, specific patterns, whatever, cool. You can go and trade this chop in between, and then you can even compare them. Right. Right. And like I said, it's just a matter of developing your process. And you can develop that process very quickly when you get lots of repetition. And this is our short-term price target right here. I'm going to wait for that make it or break it line right there to happen. I think it's going to reject, but that's where the center line is here too. So, well, close. Probably move it up here. Right in there. There we go. That's where I want it. And then this is our support line right here. That's this guy here. So if it breaches support here, it'll likely hit the bottom of this liquidity zone. If it holds here, it'll go right to this target zone, which is 50% of this trend. And then from there, we can decide, okay, is it going to break out and continue, or is it going to break down? I'll probably let that be about my last few trades in the session here. Yeah, no problem. Yeah, do it. You'll be blown away. Like I said, I mean, like on paper a couple weeks back, just screwing around with the futures, I was running one at a time until the account balance went from 50,000 to 70,000. Then I went and did, because the initial margin was so low on that account, I transitioned from 1 to 10 ES contracts and doubled that account in a week, or actually 4 trading days. And then before the data went out on it, I pushed it to like 125,000 or something like that. Just scalping little 3-pointers over and over and over again. It wasn't so much about the money amount, it's ridiculous, but the process is where it counts. And realistically, yeah. Right. It's like blow it up, rinse and repeat until you get it right. That's all there is to it. All right. Here's your extension. See it, man? Here's your extension if you guys are watching on GME. That is the 200 period as well on the 1-minute chart. So this is likely where people will take profit. If this trend is going to continue, 2750 is certainly in range. That's back to that median line, and we know where that comes from. That's the top of this mess. All right, this is a big-ass gap. This shouldn't be here, but here it is. Oftentimes these gaps love to fill, so when people profit this, the short sellers will sell right into that. Don't even for a minute believe that this is going to FOMO its way up to whatever. But if you're just day trading it, you can take confidence in knowing when to take profit and when to get the hell out of the way. And this is your median point, that 2750 zone. If it breaks that, this is your next target. This is your next target. 3130 is on the board. it can hit those. You can take a bull trade out of that, but know that this is one hell of a gap, and they are very unlikely to continue to go much higher than that. So probabilities say be very, very cautious taking long positions on this. But in the meantime, there's certainly some short-term price action to scalp. So don't be afraid to scalp it, but I sure as hell wouldn't try to swing trade it unless I'm selling credit spreads. That's another story. I don't want to get into those right now because oftentimes with GME, unless you've got one hell of a broker, you're not likely to fill those credit spreads very well unless they're in the money, and that's risk that you might not want to take. Early assignment is rampant on options for that thing, especially when the implied volatility is through the roof, which it is. So just be cautious on that. I wouldn't necessarily throw credit spreads at it in the money, but it's a possibility. As for FRC here, we've made our bullish measured move. Now we're in a high and tight pennant. This is the 60-40 rule right in plain sight for you. 60% chance it follows through and runs out. 40% chance it fails and reverts back to the mean, which is our 50% retracement line of that previous pattern. So if this, then that. If it breaks out, cool, run it with some bull positions. If it doesn't, short it if you're crazy enough, or wait till it hits this line and figure out what it's going to do next. Pretty simple stuff, just basic price action. All right, SPY back at that critical line that I drew right here. I made it nice and thick and bright so I can see it stand out against the other lines. And this becomes a fan line and an extension. And then we got this is an angular support line. I'm going to adapt it. I'm going to tweak it line right up to here. And this becomes your other extension. There's a focal point here, so be aware. It's got a higher probability of hitting this after a break than it does of hitting this on rejection. And if you draw the next regression line, or next descending trend line, there's your short-term actual target right here. So bears have it, rejection here, this is your target. Push above it, this is your bull target. We're starting to look like a cup and handle continuation pattern in a critical area of a supply zone. And this is where things can kind of get funny. Whenever you have a cup and handle, know that it is never a reversal pattern. This is rounding bottom, okay, that's not a cup and handle. This here, after a bullish trend, is a cup and handle. And they do three things very well. They test support in the mean, so find about the mid zone of all of these candles here and know that that is about support. So 399.50 is your critical support in this cup and handle. Then you got two rim lines. You got your high here and you got your second high up here. So 399.80 is the critical resistance point. If this breaks out, it'll likely hit that 399.80 resistance point, pull back to the base of this control bar, 399.60, 20 cent move or 20 point move or 2 point move on the ES, not much. That is likely the test point for a pullback after the handle. This is the cup, the handle hasn't formed yet. So handle break will likely hit that target or the other rim line, bounce back down, test the mean, and continue. If it breaches 399.80, the quick measured move is this bar here. So if you were to draw a box here to here, that target becomes right up here about $400.25. So you can take and just run a quick line hanging in space up here for all you care. And know that that's a bull target on a cup and handle breakout. And the probability of a cup and handle, just the same as the 60-40 rule, the same as a pennant. But know that if it does break out, it's likely to hit that target pretty well. Sometimes it'll fall short a few pennies, depending on which algo or market maker knows this price target is here for bulls. And I'll always go and assume a 10 to 15 cent slip rate for targets on SPY. So if this is on a key pivot, SPY tends to trade in quarters. I would say $400.12 would be a happy target for. I would be happy taking enough profit on that move if I started seeing weakness in the trend on the follow through. If it breaks down, I know where the where the critical support point is. It's on it right now, and I know the likelihood of if it breaks that line, it likely follows through to the mother bar. This is the whole bar in that session. 399.20 is your last ditch support. So if you short a break, that's where it's going. If you long a breakout, likely this will be the bull target. I'm happy taking profit anywhere around 400 to 410, 413, $400.10 or $400.13, wherever it hits. When I see weakness, I'm done. I'm going to borrow a fan line here, I think. I can just run this one. But when it comes to price action, these cup and handles are great. But knowing when to be very leery of them is very important. They don't always follow through. Sometimes they just fail miserably. They will catch a bunch of people off sides. And this is a great chance for bears to trap bulls right here. But knowing where the critical lines are in the sand, so to speak, gives you the advantage of, if this, I can trade that. FRC breaking out. Half leg puts it up here at about 1680. Full leg can go to 1720. Just kind of eyeballing the size of this breakout. GME failed that 200. Bam, we're back down right to that target. What was once a bull target is now a bear target. They're done. Let's see what happens. In the meantime, I'm going to probably end my session from the audio side. I'll keep the video side going on our Discord channel, but I'll probably end the session out to YouTube. I'll see you guys. I'll come back and announce my leave in a minute. I'll be right back. I got to let some coffee out. All right, I am back. FRC almost got to 1680. That's a pretty good eyeball move. Now for GME. Morning. How goes the scalping this morning? Yeah, those happen frequently around this time of year. Like St. Patty's Day and a couple other, friends come to town this time of year. Oh, cool. Love me a concert. Maybe I'll make a couple more little price action moves and then call it for most of the day. But I'll keep my stream going because we got a lot of stuff happening right at 2. We got the FOMC thing. I think so. I think it's going to be insane. We got a lot riding on it. And this FRC thing, I don't know that Jay Powell's words will affect it much, but I know Yellen's words will. I think if she decides that, she wants to throw the kitchen sink worth of our tax dollars at it, well, she will. So we'll see what she says on that one. But, Jay Powell affected a bit with the rate hike. Of course, it'll change things a little bit. But for the most part, this will be more affected by Yellen than it will by Jay Powell, I think. We'll see. All right, so we've reached the bottom of the liquidity zone. Watch for a bounce here. This is that same one we were talking about yesterday, man. Great minds. So this looks like a flag, a bull flag to most people would see that. I see a measured move that played out on a cup and handle failure. Right to the other half of this zone here. Stayed within the mother bar, however you want to call it, it's done it. Now we either see a break and a downward trend to the next pivot line, which is down here, or we see a reversal here and we go back to the top of the liquidity zone. There's a good chance we can sit here in range all day long till about 2 o'clock here in this zone. In fact, I would almost consider that a very accurate and very probable thing to say. There's a good chance we can come back, and I'm going to move this 398 pivot to 398.10 because that's about where our reach was. There's a good chance we can range here, here, or even down here. Up till about 2 o'clock, this is the no man's land, the whole area. And if you got to imagine there's, a trench here and a trench here, and, this is France and Germany or whatever it was in World War I. The war went nowhere along those lines, no man's land. A bunch of people were getting picked off when they tried to cross it. It was a sad story, but this is kind of a great analogy for trading because a lot of people get chopped up in this mess. And when you can trade little short-term charts, cool, you'll be a successful little sniper. But if you're going to try and swing trade this, I would rather wait till after Jay Powell. Just my opinion. But feel free to scalp everything that moves in between. It's rough, and even on a 5-second chart, we're seeing some very low predictability here. Had a couple fan lines in play, but nothing really dominant, There's this guy here, but that's such a short range, you won't really do much with that. We might get a quick compression and break here, or reprint back in the liquidity zone here. And there's one more line I can draw right here, actually. Hell, if I just angle this here, it becomes a regression line. Angular resistance, angular support, regression line in the middle. I can pretty much call that out. We can get one more quick trade out of this, if this then that. That's about it. It's 11:05. Kind of iffy. This FRC, you know, it's been an easy day trading scalper for a couple weeks straight now almost. But it's going to come to a point today, I think, and we'll either run up or run down long term. I got a few YOLO spreads out of that thing. It's just they're like 1,000 to 1 risk to reward ratio. Very cheap spreads. If they make it cool, if they lose 100%, I don't have to really give a damn because I've already scalped enough of the price action to cover that position 10 times over. So not too worried about it. GameStop here. Yeah, it's pretty easy to just, you know, treat that like any other penny stock we've traded. Look left, find the pivot points, trade from one to the other, be done with it. Those pivots were all defined by the daily chart, and it's been playing with every one of them perfectly today. And then we've added some short-term targets and all that stuff in the mix. That's been easy. It's one of those, if you're not up to trading the chop here, you can at least scalp this penny stock for a few swings and build your confidence back up, so to speak. But now it'll be in the lurch for a while. It'll probably hold this line, maybe give us one more quick push to like 24.54 and a failure breakover, if at all. So that one's kind of boring. Yeah, just wait till JPOW takes the mic. Things are going to really explode then. And, you know, knowing where those lines are on those two diamond patterns we drew out, that defines all of your possibilities for range. And all you got to do is trade them when they come. So if you see a quick, you know, bunch of bullish volatility right before he takes the mic, cool, scalp that. Once he gets to the podium, go flat. Wait till the signal either continues to go bullish or continues to reverse, and then trade the other side of it. That simple. All right, well, I'll leave my stream running on the Discord channel for you guys. I'm going to probably cut it off to the YouTube part, and I will see you guys a little later on. I'll be off and on in voice today if I can. I'll try and get back here for the JPOW moments. You too, man. We'll see you guys later. And bye, YouTube. Thanks for joining us.